Hello and welcome to the PHTA Weather Report for the fourth quarter of 2023. I'm Scott Hackworth of Industry Insights. We're just going to do a very brief overview of the economy and industry's performance for the past quarter. One of the first slides to show is just what industry leaders are telling us are on their minds. Currently, the economic factors such as inflation and consumer spending patterns has remained for all four quarters of 2023 has remained the number one item, followed by recruiting and retaining skilled employees, and then cost concerns and its impact on profitability. I do want to just take a very brief time and talk about supply chain disruptions, which is listed here at the bottom. In Q1, it was listed for 25% of respondents told us that was on their minds, and that has fallen down to just 5%. So definitely some improvements have happened related to the supply chains. Let's just take a brief look at the economy. Real GDP was very strong in the back half of 2023 especially, and so we are expecting, though, that to begin to soften a little bit here in 2024. We don't expect anything near the rates that we've been seeing here recently. So we do expect that to soften, get closer down to 1% going forward. Inflation had been really rampant, softened quite a bit here more in 2023, and we continue to see that softening. Now, it hasn't gotten down to what the Fed is wanting exactly, something below 3%, but we do expect that is going to happen in 2024. So we do expect some softening, further softening on inflation, more toward the 2% target that the Fed has identified. And in line with that, the federal funds rate currently 5.25% to 5.5%, the highest rates we've seen since 2001. The Fed has hinted, or actually explicitly stated, that they do anticipate some reductions in 2024. They're trying not to be premature there. They want to track the data. And so we are expecting, though, 3 to 4 rate reductions during the year. And we think those will start sometime around May, June, and will allow the rate to fall from the current 5.25%, 5.5%, down to something more in the 4.5% range. So, and then housing permits, obviously related to some of the new pool installations in particular. So those were down. Single residential in 2023 had another down year, so it was down about 7%, and so we do anticipate that will improve in 2024. So it won't be a steep growth curve, but we do expect some improvement in 2024. So let's look specifically at the industry and what has happened there. Builders between 2018 and 2022 had seen strong growth and had told us at the beginning of 2023 that they expected a little bit of modest growth during the year. And so what the quarterly study told us is that actually they saw a little fall off is what we're expecting for most. And so just given how they responded to our quarterly pulse survey, we do feel like most were likely down a little bit for the industry. Service and maintenance organizations, they've had a very steep curve, especially in the last couple of years, as all of those pools have been installed and now need service and maintenance. So, and they had anticipated strong growth, and that did occur. Also, the retailers told us that they expected to be largely flat, and our data are signaling that yes, indeed, they were largely flat, so like they had anticipated. Looking ahead for the next 12 months, the business leaders, the companies are asked to tell us what do they see for the year ahead. And as you can tell, there's more orange than blue, which signals to us optimism. And so we see that, yes, even though 31%, so nearly a third, expect just 1 to 5% growth, there is still much more orange than blue, which is a good sign. Looking specifically at builders, builders saw an uptick in Q4, and so they do continue that optimism. And service and maintenance companies, their growth had actually somewhat softened in Q4 versus what it had been earlier in the year, though they do remain very optimistic about their prospects for growth in 2024. And the retailers, they also are more optimistic than pessimistic in terms of their growth. And so, again, we do see that even though it is more modest than the other sectors. Looking specifically at sales and the backlog levels, new pool sales in Q4 ticked up. The backlog, though, ticked down, and as you can tell, there is definitely more blue than orange, signaling that the backlog has been largely eroded throughout the year. Remodel sales, which had been very, very strong for most builders who had modified their operations toward more of the remodels which were being requested. And so you can see much more orange than blue, so they were definitely engaging in a lot of that, but it did tick down a bit in Q4. And the backlog for those jobs also fell quite a bit. Portable hot tubs, swim spas had a rough 2023 and continued to slide in the fourth quarter. And their backlog, likewise, very much fell. So, closing thoughts. The economy is showing some signs of stabilizing. We expect things to get closer to the long-term average. We feel like inflation is going to come closer to the targeted 2% rate. GDP is going to be closer to 1%. And so it's definitely going to soften and things are going to start constricting. And then we think we expect the Fed will also reduce its rates a bit throughout the year. Builders and remodelers, Q4 showed some rebounds for them. Retailers also did a little better in Q4, while the service companies actually, their growth lessened some of the momentum. So everyone kind of came back toward the middle a little bit in Q4, but there is a lot of optimism about the year ahead. And so we're interested to watch that. For those of you who are interested, the Business Operations Survey, which is a very detailed look at performance, that survey is currently available, and we encourage you to participate there. And then the next edition of the Quarterly Pulse Survey will become available on April 15th. All of that information can be found at phtainsights.com. And so we do encourage you to participate, and we appreciate you watching this weather report. And thank you very much. Bye-bye.